Hello, and welcome back. I'm Carol Rudolph, a global real estate advisor with Premier Sotheby's International Realty in Naples and Marco Island, Florida. I am also a certified real estate and second home property specialist. During this second video of our series, we are going to discuss a couple of financial topics that will require your attention if you do decide to purchase a vacation or second home property. Tip number one. It is most important that you consult with your CPA or financial advisor. He or she can run through several scenarios that take into consideration relevant IRS guidelines that we will share with you later in this video. They can also put together a financial plan to help you understand how you can comfortably purchase a second home, taking into consideration your budgeted cash flow, your retirement savings, your children's college funds, emergency funds, and any other financial considerations. Tip number two, what are your financial goals for owning a second home property? I use an Excel template that I have modified many times over the years to do our plan. There are also many financial budgeting and analysis software applications for real estate available that you can use, like Stessa, Roofstock, and Yardi. Remember to account for expenses like utilities, property taxes, repair and maintenance, insurance, property management, and financing fees if required. Tip number three, you will want to explore different financing options to find the best one for your situation. Typically, lenders require second home buyers to have a higher credit score, a stronger income to debt ratio, or to put a larger amount as a down payment on the property. You may be able to alleviate the higher cost of borrowing by taking out a HELOC, which is a home equity line of credit on your primary residence, or by using a portion of your after-tax investment account as collateral for your purchase. A cash flow analysis can help to determine the best option. Here are two examples that are free cash flow templates. Number one, from Fannie Mae, Form 1084. Number two, from CCIM, which is the Certified Investor Member Association. Tip number four, it is important to understand the tax implications of owning a second home property. Take into consideration your property taxes, your rental income taxes, and any other local regulatory taxes that might apply. A couple of IRS guidelines to be aware of are the 90-day rule. If you pay cash for your second home, then decide to refinance with a mortgage, the IRS imposes a 90-day time limit from the date of the home purchase. 14-day rule. If the property is owner-occupied part-time and rented for 14 days or less than a year, the owner is not required to report the rental income on a tax return. However, neither can you deduct your expenses. Capital gains. Real estate is impacted by long-term and short-term capital gains, just like stocks and bonds and other tangible assets. Typically, a higher short-term tax rate applies for assets held less than 1 year, and a lower tax rate applies to profits realized on capital assets held for longer than a year. That's it for today. Thank you for joining us. If you would like more detailed information or resources on this topic, please email me and I will send to you. In video 3 of this series, we will discuss managing the details of your purchase. We hope you can join. Bye for now.